All right, work together 5-3. Basically, we're dealing with a chapter that deals with cash controls. And here we have something that we're familiar with. Would you agree? Journal. We've used a journal before. So this shouldn't be something where you're like, oh my God, I don't know what this is. Oh no, what is it? I thought I changed it. It won't be graded. I'll change it later. Okay. It's only 6 points, so you'll be fine. This section here deals with dishonored checks, electronic funds transfer, and debit card purchases. Okay. Now, conceptually, when you talk about an electronic funds transfer, which is going to be an acronym for it, is going to be EFT. Have you seen or heard of that before, EFT? Okay. Have you ever gone to a store and you've seen somebody write out a check and the company actually takes the check, puts it in the register, and then physically gives the check back to the person? And actually that gets a voided out canceled check now? Because basically what they did is that company goes through and actually does an electronic funds transfer. They scan the check, get the bank routing number, and you're signing and saying it's okay, and they take it out of your account right away. You don't have that big long process of taking the check, going to the bank processing it all is done automatically. Same thing can be if you have automatic payment set up, like if your parents have automatic payment set up for like your cell phone bill. You set it up with your cell phone provider on a certain day at a certain time, they're going to take out the amount of the bill. And you don't really need to do anything because it just happens. That's an electronic funds transfer. You have an agreement between yourself, the bank, and whoever you're paying for this money to be paid. Nice and slick, and that's happening more and more because it actually costs the bank less money to do that. Why does it cost the bank less money? What do you think, Bennett? Why? Okay, think about it. If I were going to give you a check, what has to happen? What does the bank have to do? Okay. Bennett has to do what? He has to go to the bank to get cash, right? So you need to walk up to a teller, right? Give it to the teller. Teller has to do work, process it. Teller then has to give you cash in there, and then the bank then needs to get money out of my account and put it back into their account so they can manage up that cash. Would you agree? Now, the whole thing may take 5 minutes maybe. If I set it up as an electronic funds transfer and I have an agreement, and the bank automatically knows at this time, basically my cell phone provider is going to say, okay, here we go, at this time this is the amount of the bill, and they take it out. What does the bank have to do at that point? Does anyone need to push a button? Do they have to pay an employee to process all that work, handle that cash, make those transfers? Okay. In their IT department, they have everything set up. So it actually is more efficient for the bank to do the electronic funds transfer. So they have to have somebody on the backside managing and doing it. So it's not like we're replacing all the employees at the bank, but it is a more efficient way for the bank to do the work instead of processing a check. Now, for example, I bank in town here at Seymour, and one of the things that I get is I get cheaper rates at my banks for loans. Any idea why? What do you think, Skylar? Higher credit? It doesn't have anything to do with my credit score. It has to do with the fact that I work here at school. Do you know anyone that works for the school besides me? And you're the teachers? How do I get paid? Do they give me a check? Direct deposit. The bank knows on the 15th and on the 30th, I'm getting paid. Correct? Do I touch the check and then go to the bank and deposit it? So the bank knows on those 2 days, every month, money is coming into my account. They don't have to wonder how long is it going to take for me to drop off my check. And because of that, I am guaranteeing them that I'm going to get paid. So because I have direct deposit, they will give me a cheaper rate on products or loans because they know money is coming in. It's a less of a, oh, wait till I get money into my account and then I'm going to pay you type of thing. Does that make sense? They're guaranteed the money right away. So when you talk about electronic fund transfer, that is also one where my employer is transferring funds to my account. Now, the last example up there is debit card purchases. 5 years ago, less people used debit cards than they do now. Basically, a debit card is pretty much just like a check. The money comes out of your account right away. Unlike a credit card, you pay the bill once a month. Now, a dishonored check, what does that mean? That's a vocabulary term. A check that bounced. It's a naughty check. So a check that was tried to be cleared, but it didn't have enough money, so therefore it goes back. And with those naughty checks, you have to go through and attach those fees. Remember yesterday I talked about that $20 check to Don's? After all those fees get added to it, how much did it cost me? $75. So when we deal with a dishonored check, if I'm a business and somebody writes the check to me, they may originally have owed me $20, but after the dishonored check things and those fees, they now have to pay me maybe it's $40 or $45, depending on the charge that I am assigning people because of the NSF. So we need to then put it back on the books to say that, hey, you owe me this amount of money. All right? So we only have 3 transactions. The first transaction, look here, receive a notice from the bank of a dishonored check from Christopher Icola, $63 plus a $10 fee for a total of $73. How much money does Christopher Icola owe us? $73, would you agree? So when Christopher originally paid us, what happened to his accounts receivable account? Did it go up or down? Down. It probably went down by $63, would you agree? So maybe his balance is now 0. But because his check bounced or it's dishonored, we have to put back into accounts receivable that he owes us money. So therefore, I'm going to have to go ahead and do accounts receivable is going to need to be debited for 73. What account's going to be credited? Because we just figured out the debit, but which one would be the credit? Oh, I think I heard it. Who's saying it? She's saying it so soft I can hardly hear. Speak up, Trisha, because you weren't right. And I'm dying over here. Call 911 if I fall over. Cash. Because what happened is, originally, when we deposited this check from Christopher into our account, we deposited $63, right? So our checkbook balance went up $63. Because the bank said, oh, yeah, there's this. And then it went through and processed it later. And when they processed Chris's check later, they realized there was no money in there. So they had to take $63 out plus $10 for that fee of trying to process a check because people had to do extra work. So therefore, even though I deposited $63, my checkbook balance now is going down $73. So accounts receivable needs to be debited $73 and cash is being credited $73. So we're going to do that on line 3 of our journal for March 15th. So put in the 15th. Because we're actually starting on line 3 of the journal, they're saying, oh, don't worry about it. Other transactions has happened before. So I'm going to do accounts receivable, Christopher Icola. Source document's going to be M121. So here's another example of, oh, we're crediting crash and the source document's not a C. Unbelievable. We're going to have one more in this chapter too. So we're going to do accounts receivable is going to be debited for $73. And then cash is going to be credited $73. And it's important that you understand why we just did that, not, oh, yeah, I just put numbers here. That's why I spend the time explaining it, and that's why I'm asking you to read the chapter, because the chapter explains basically what happens so you understand how the accounts are affected. Now, March 16th, paid cash and account to Spinsoda Enterprises for $35 using EFT Memorandum 122. Basically, EFT just means I paid them cash, but I didn't physically write out a check. So this transaction is no different than if it would have said check number 122. Agreed? Except the source document changes. So for this one, I'm going to put the date of the 16th, and who am I paying but accounts payable, Spinoza Enterprises, and it's going to be a source document of M122, and it's going to be a general debit of 135 and a cash credit of 135. So again, another example of crediting cash, and it's not a check, but it's like a check because it's an EFT. Ready for the last one? It's really hard. The 17th, purchase supplies $31 using a debit card, memorandum 123. What is a debit card just like? A check, except it has a different source document. So we're going to put the date of the 17th, and what did I buy? Supplies, not supplies expense. You don't know anything about supplies expense. Do not use that account supplies expense. We'll learn about it in another chapter. Ignore it. M123. And I'm going to debit general, and I'm going to credit cash. So here we have 3 examples where I'm crediting cash, except the source document is not a check. Okay? Go ahead and try the on your own, please. All right, ladies and gentlemen, we are now starting 5-4. Now, eyes here, don't start filling it in because you're going to get confused. Now, this section isn't hard, except the fact that you need to understand what petty cash is, as I bump you and knock you over. Okay? Has anyone heard the phrase petty cash before? Sarah, give it to me. Your dad, he's used the phrase before? In any relation of like a story or anything that... Yep. And how has he talked about it? You've just heard him talking about it? Okay. You're like, yeah, whatever, Dad's just talking again. I don't really need to listen to Dad, right? Just wait for him to give him whatever you're waiting for. So petty cash. Basically, petty cash is, what she said, a small amount of cash that the business keeps on hand. Okay? They keep it on hand so that way if they need something, an employee can go and buy it. Because can I write a check out for the school to go buy something? Can Mrs. Otto write a check out? Can Mr. Zahn write a check out? Yes. So each business has cash controls set up that not everyone can spend money on things for the job, right? Now, if I need a check, like for example, I need 2 checks to go to FBLA this weekend, I had to get a process it ahead of time and give them an invoice of what I need the check for, and then they write the check and they give it to me. But I can't sign my name on the check, and I can't just say, oh, give me a check. I have to have proof, which makes sense because the school doesn't want me just spending money on random things like Google Glass or something, right? So businesses have cash control so that way they know where their money is going for and that employees are not tempted to do things with it. And the key word is it's a small amount of cash. Businesses sometimes will have petty cash of $75, $100, $150, or $200, depending on the nature of the business. Okay, let's say that I'm working here at school and we had a petty cash fund and my battery died on my headset here and I needed to replace the battery. The easiest thing for me to do would be to take some petty cash, go to Don's or to Shopko, buy the battery, and then come back. Would you agree? Instead of for me to go to Mr. Zahn, fill out the paperwork, them write out a check, I take that check, and then I go to Shopko and I get it. Because how long would it take for me to get that check? It could take me 2 days. Would you agree? Because I'm gone, he's gone, life is busy, I have to have, the check has to be made out for the exact amount of the purchase also. Would you agree? Is the school going to give me a blank check? I hope not, because that wouldn't be very good. Now, does the school have spaces that we could go charge at? Yes, but that's not the concept. The concept is that oftentimes it's easier to take a small amount of cash to go make a purchase for something the business needs. So what I would have to do is, let's say that I go to Shopko and I buy that. I bring the receipt back. Okay? So let's say I brought $20 and the battery was $7. Okay? So then I should, back in the area where petty cash is collected, I would put in there the $13 change and the receipt. Okay? Because now the next day, let's say Miss Otto had to go buy some paint supplies for the Thunder Zone, and she did the same thing, took some petty cash. Went to Shopko, purchased it, and she bought $10, but it was only $5. So she would put the receipt in there and put the $5 change back in there. Okay? A business decides how much petty cash they're going to keep on hand by kind of estimating how much they typically use. You don't want to have an extra, so I'm not going to keep $500 in petty cash out there, because that's just not a good idea to have that much extra cash laying around. But you don't want to have too small of an amount that you have to go back and keep replenishing it all the time. It should be about a month, enough for a month. So what happens is, throughout the month, the business will have employees go purchase things. Then the employee will bring the change back into the petty cash area, and then they will give the receipt. And then from the receipt, we decide what it is. Is it supplies? Is it miscellaneous expense? Is it advertising? For example, yesterday, Michelle Wininger came and hit me up for something for girls basketball. Anyone know what it was? They're selling those calendar raffles. Have you ever seen those before? So she asked me if I buy a calendar raffle. I said, sure, I'll buy a calendar raffle. Now, do businesses sometimes get hit up for that? And they would use petty cash for that, because they're not going to say, oh, come back in 3 days when I have a check. So they would then have that, and that could be like a miscellaneous expense, or advertising if they needed to run down to the paper to pay for an ad they needed to put in that week. All of those things, they take those receipts and they look at it and then figure out what has to happen. Now, one thing I don't like about this example here is we are doing two transactions right next to each other that typically don't happen. Okay, the first transaction that is listed up here it says on March 3rd, paid, or July 3rd, I can read, paid cash to establish a petty cash fund, $250. C57. A business will do that transaction just once, and only once. Basically, what we're doing is we're transferring an amount from our cash account to a new account called petty cash. So cash is going to have an account number 110. Petty cash is going to be 120. Okay, because we're assuming a business is going to know ahead of time that they're going to have a petty cash account. So we would have cash will be 110 and petty cash is going to be 120. And we are going to say, the business is going to make that decision. They're going to say, okay, I'm always going to keep $250 in petty cash. And that's going to be the value of that account. So the business will do that once, and that's it. Maybe a year later they'll decide, maybe I need to change the amount of petty cash, and instead of it being $250, maybe it needs to be $300. But that's really rare, and you'll never have to do that transaction in this accounting class. Okay? But only once for the entire business do you establish the petty cash fund. Now, the second transaction, July 31st, this you will do every month. Okay? And what confuses students with the second transaction is where it says paid cash to replenish petty cash. And I've kind of trained you a little bit to read the transaction and see what accounts are affected. And you see cash and petty cash, so you try to use that account title, petty cash. But you don't. Okay? Here's what's happening with the second transaction. I explained the first one. Basically, we're transferring amount from cash to petty cash. The second transaction, what we're doing is we look in that area where people put their receipts and their change, and I go through and I say, okay, this month we spent $25 in supplies, I spent $8 on miscellaneous, and $45 in repairs. I have all of those receipts, but did I journalize that at anywhere? Is it important that I know that I spent that much money in repairs this month? That's important information. So because we just used the petty cash amount, I need to journalize how that cash is being used. So I would, on the 31st, write a check. And I would physically make this check made payable to cash. Have you ever done that? Most people just go to the ATM machine and get cash now, and you don't actually write a check to cash. But I can write a check made payable to cash, go to the bank, and the bank is going to give me cash back. So for this 31st, I would make a check payable to cash for $78. So I know that my account 110 cash needs to go down $78. So that's going to be credited, but I don't have my debits. And I am not debiting petty cash. You are only going to write the account title petty cash once for your business, and that's when you establish it. All the rest of the time, you're just going to affect the rest of those accounts. So for this transaction on the 31st, I'm going to debit supplies, then I'm going to debit miscellaneous expense, and I'm going to debit repairs. In Aplia, it matters the order. If you weren't in Aplia, could you do repairs first? Certainly. Okay. But in Aplia, you need to do them in the order that they're listed in the transaction. So the first one we'd have to do is supplies, then miscellaneous, and then repairs. And there's not an account called repairs, but there is going to be an account called repairs expense. Okay, so let's go ahead and take a look at these transactions. This last transaction, I would say a third of you are going to get wrong on your test. I like to tell you that because that's always the area that students struggle. So we're going to do this for July of the current year. The first transaction is the date of the 3rd, and I'm really transferring money from cash to petty cash. So the account that's being affected is petty cash, source document C57. I'm debiting petty cash and crediting cash because, well, C check, C cash, C credit. And I just transferred funds from one account to the other. Now, 30 days have passed. Okay, not really 30 days. 28 days have passed. And I need to get more cash so I can do the next month, which is what is confusing because you just did one transaction. You think the other ones come in right away. But it is actually going to be always at the end of the month when you replenish your petty cash account. So the last day of the month, we're going through and replenishing. And I'm going to go through and I am going to debit supplies, not supplies expense, for 78. Now, you have all of these accounts columns to choose from. You are not going to look at me. Do not affect cash 78 and here and here. You're going to affect cash once. Does that make sense? At the end. Did I put the wrong amount in there? I did. Supplies is supposed to be 25, excuse me. Because how much is cash am I getting? 78. Okay, so right here, I'll fill in the rest of it so you can see the layout. Students will also make a mistake on this. When this transaction is completely filled out, you will notice cash is only affected once for the total amount, 78. Supplies, miscellaneous expense, and repairs expense are each affected on their own for how much we spent for those, but only one cash account. This is what I see students do, and Aplia will mark it wrong, and you would get 3 wrong on this if you put 25 here, 8 here, and 45. Because what you need to realize is for this transaction, we wrote one check out, check 97. That check was made payable for $78. So that is how much cash is being affected. But we affected 3 other accounts from it, and they're listed right here. Seems simple now. Guarantee a third of you are going to get this wrong on the test. This seems to be the tricky part where students forget, record things incorrectly there. Okay? Go ahead and try on your own. I always like to try to point out the tricky parts of the chapter so I get your attention so you realize, hey, this is something I maybe should focus on a little bit more because Mrs. Grassel says a lot of students struggle with this. And every time I get to the section, I always try to present or teach it or talk about it in a different way so that way you have another idea of how it should be affected.